actually on the stage 17 years ago talking about video game advertising. So when I was
Are you serious?
watching Carrie talk about it earlier with our friends from Gum Gum, it was bringing back IAB memories.
Wow, 17 years ago. What event was that?
One of the IAB summits. You guys have a lot of them. I don't know which one it was.
Randall, do you know which one that was 17 years ago?
Yeah.
Digital video, okay.
Look at that.
That's a thing. Digital video is a thing now.
I heard.
Yep.
I heard.
Big business, my friend.
Finally.
So let's get serious now. What's worrying you right now in terms of, you know what, I'm going to take a half a step back. Would you at least tell the crowd a little bit about who you are, like what you do, what you focus on, what your day-to-day is?
Sure. So that's not so serious. So I'm Darren. Nice to see many of you. I'm currently wearing the hat of leading growth at Bain Capital. And so I focus on all of our portfolio companies in North America and parts of Europe, and working in marketing, e-commerce, and really all the growth functions within these organizations. So my job is help our CMOs, help our CDOs, help our heads of e-commerce, et cetera, accelerate their time to value. And the companies that I focus on are all sort of hundreds of millions, if not billions of dollars in revenue. So some companies that you may know, like Canada Goose, or Bob's Discount Furniture, or Cotopaxi, or Virgin Voyages, which we just launched. But also, those are some of our consumer brands. We've got lots of B2B brands in healthcare and industrial, some other spaces that aren't as sexy as the ones that I've just mentioned.
So you're helping to figure out where to invest in companies and burgeoning brands and retailers. Obviously, technically, we're in a recession right now. Mm-hmm. What's worrying you right now about investing in brands and retailers and the overall retail and brand space?
Yeah, so I'm normally a very positive person, mm-hmm. But right now, probably a little more gray hair as we think about the next 18, 24 months.
Yeah.
And the reason for that is, about 2 years ago, we pumped about $1 trillion of stimulus into the economy. So we all, witnessed that in some form, and we're paying for it now because of inflation. And so if any of you are retailers or you own a store, you probably didn't have a lot of products on your shelves over the last 24 months because consumers were buying all of those products. We couldn't keep furniture on our shelves at Bob's Discount Furniture. We couldn't stock our stores, in some of our other brands because they were just being bought. There's a lot of dollars in the economy. And so what ended up happening was a lot of the stores, a lot of the brands went and reordered quite a bit because they were, they're sold out. We had to put more product on shelves. And so we went reordered, and we've probably seen a lot of the press over the last 18, 24 months about carton costs or shipping costs from Asia to the United States, where traditionally, if you get a carton of goods, it could cost anywhere between $1,500 to $3,500 to ship it over. Yeah. It was 10x that during peak pandemic.
Right.
And so we loaded up all these cartons. We bought as much as we could get. A lot of them are sitting offshore outside of LA. Some have now come on. And what's happening now in the world is we got a lot of product. Especially in the United States, there are a lot of products in the storerooms and the back sort of offices of a lot of the retailers out there because those products have finally gotten here. Problem is the timing. The timing is we now finally have product, but we have such high inflation and the economy's falling out. The Dow is down 20% this year. And so consumers that were cash rich 18 months ago with the stimulus are now hurting for those dollars. And so we have this imbalance, which is a lot of product, but not a lot of dollars to go spend, which is going to get worse. You may not feel it today, but we predict that we're going to feel it over the next 18 months as we get deeper into this. And so we have this scary moment, which is a ton of product, less dollars to spend. What do we do? And so as retailers, as people in e-commerce or anyone who's selling anything, that's the issue that we're thinking about, we're wrestling with as investors in the world, but also as operators of a lot of these businesses. I promise you I'm positive.
So what you're saying is that during the e-commerce boom, e-commerce-based companies kind of got ahead of their skis a little bit.
We did, and for good reason, in the sense that we're all stuck at home in the pandemic, and we had to buy stuff, and stores were doing everything they can possibly do to survive. So, putting new systems in place, buy online, pick up in store, curbside pickup, yada, 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 all those things. So we invested because we went from 18% average e-commerce for any kind of retail business up to like 40, 45, 50% for most businesses. Oliver could give us the exact numbers, but I'm hoping I'm tracking in your right way. But the problem is we've eroded that now. So in just the few months that we're kind of back out in the world, I'm not trying to say the pandemic's over, because I don't believe it is. My parents are home with COVID, or else I would have been here today. But with that said, that e-commerce gain has now eroded back to pre-pandemic levels. And so the problem that a lot of businesses now wrestle with is they invested the infrastructure to put in place to do all of these things like curbside pickup, buy online, pick up in store, like all that stuff, when it was like 40% of their business. Now it's back to 18 to 20-ish%, right. Maybe a little high still, because they still could erode a little more.
Yep.
But how do you support it? Like from a budget perspective, how do you now maintain doing that from a business perspective and now support all the people that are coming back into your stores? And so those are the big things that we're kind of thinking.
So what are you telling brands and retailers in that situation right now? Because things remain to be incredibly unpredictable. What is the playbook?
There is no playbook. That's the first thing, which is, there is no playbook. However, we got to meet the consumer where the consumer is. And this is the opportunity to be super disruptive. Companies with cash on the balance sheets,
yep.
Are hopefully going to be able to weather this particular storm that we're about to go through. And, the more cash to get through it, the better. And it's going to be a blip in the overall time horizon.
Yep.
As investors, we take 10-year sort of vision to our investments. And so we think, any 2-year outlier is not going to ultimately hurt us.
Mm-hmm.
But for smaller brands that may not have the cash to get through the time,
yeah.
or don't have the infrastructure to get through it all, now's the time you got to be disruptive. I mean, it's everything that we're talking about here, which is how do you be where the consumer is and just go all in? And whatever we have to do is what we're going to do in order to survive.
That's awesome to hear. I like the fact that it's, you have to grab the bull by the horns and just be disruptive and, make your name now. Now is the opportunity to absolutely make your name. The other thing we were talking about yesterday, and I spoke with Oliver about it, is this concept of hybrid commerce. And you and I have been talking the last couple of weeks about omni-channel, and that was before we kind of realized that omni-channel that we came up with this concept that omni-channel has really evolved to H-commerce, where those things talk to each other. In your mind, what does it mean conceptually to be come on, man, stay with me. To be truly omni-channel or H-commerce.
I smile because I don't understand the difference between H-commerce and omni-channel.
They talk to each other.
They do, but I think they're the same thing, at least in my world. At least, I grew up thinking in an omni-channel world, you don't understand if you're physical or digital. It's just omni-channel. You're omnipresent.
Yeah.
And you live one life.
Right.
And so the systems, the tools, the technologies, the service, the support, the sales, don't care if it's a bit and a bite or if it's, a physical conversation. And, you do what you need to do in order, to enable that customer journey any which way the customer journey needs to happen. And some companies are better than others.
Yes.
Some companies have completely leaned in and modernized their infrastructure and, they can do a lot of the things. Maybe not all the things, but they can do a lot of it. And some companies are, in the first or second or third inning of that journey that they need to put in place in order to survive. And, different times, different moments are important. Like the last 2 years, you didn't really need to be super physical. Like a lot of it was digital.
Right.
But now the physical is sort of coming back. And so, as the customers are coming back or the prospects are coming back through the stores, we got to just meet the customer where they are and just provide as much of that omni-channel journey as we can possibly give them.
Do you think that the customer has come back with new expectations for seamlessness after they spent a heavy year using e-commerce?
Yeah, and we see this quite a bit in the B2B space.
Yep.
So we have like B2B marketplaces, we have B2B parts businesses, et cetera. And the expectation has always been, I'm a consumer in my normal life, but I'm a B2B, employee. But now even more so, the B2B experience, the UI, the UX, the experience that you're given in that world is now starting to more mirror a lot of the best practices from the B2C space.
So is this like, are you talking about like the Zoomification of the office?
The Zoomification, the design, the beauty, the seamlessness, et cetera. Like if you, like 5, 10, 15 years ago, if you looked at B2B stuff, it was ugly. It was like, vanilla, super vanilla. And now it's sort of being designed much more forward into taking the best of B2C learnings, putting those UI, UX. You almost can't like strip out what is B2B versus B2C.
Who's doing it well?
On the B2B side?
Yeah.
I'd say a lot of the bigger, and this sounds crazy because it's, we're talking about disruptor brands, but, a lot of the bigger folks, the Walmarts or the Targets or the Kohl's or the Kroger's that have B2B backends that us as consumers don't normally notice, leveraging, their design agencies, the modern design agencies in Brooklyn and New York, et cetera, to go build those experiences as opposed to giving it to like the people that were designing the corporate intranet, which is like very different. And so they're doing a good job at that.
So it's interesting that you say that when you say Walmart, for example, because obviously they're a very consumer facing company, right? So does that mean that them doing B2B so well that will kind of iterate very well in the consumer facing way?
We hope so. I mean, I don't care as a Bain Capital investor, but I believe that, Walmart will continue from, an overall market leadership perspective, push the boundaries and then set the boundaries for all of the other businesses within the categories.
Yeah, I agree. I want to talk about multi-channel and, for example, like in the big box retailer space, like in the home improvement space for a second, H-commerce. Let's use, for example, like Home Depot, Lowe's, and Ace Hardware. How make or break do you think it is for them to have this mix and even to have, as I like to talk about, this fusion where the multi-channels talk to each other?
So I chair the e-commerce committee for the Home Depot of the United Kingdom, so the UK.
I did. And full disclosure, I had no idea. That's crazy that I brought that up.
So it's a business called MKM Building Supplies. And we have basically for the last 2.5 years gone all in building our omni-channel capabilities. And the reason for that is because it's expected. We never had it before. It's now expected within the world.
Yeah.
Contractors, consultants, interior decorators, et cetera, all want an app with their products that they can potentially go purchase.
Yep.
They want to see augmented reality. They want to see, how could this potential lampshade or floor tile look in, a house that I'm building.
Yep.
So let's get that on the screen in an augmented way. And so we're building all of those types of things. And it's coming from the insights from our customers. Our customers are asking for it. And if we don't give it to them, they potentially can go elsewhere. And so, investing in that omni infrastructure in order for them, to be satisfied with us and then for us to have great relationships with our customers.
Yeah, it seems like it's a no-brainer in the home space because, you go to a Home Depot, for example, or you go to a Lowe's, you can buy technology, you can buy hammers, you can buy decorations, you can buy inside stuff, you can buy outside stuff, you can buy plants. There's so many different things, so many different iterations. What category do you think is really ripe for those types of omni-channel, H-commerce shopping experiences, like where it's not there yet, but it should happen soon because the opportunity is really there?
Well, I was talking to Randall about this, when we walked in earlier, which is, when you think about, the folks that are coming to events over the years, it's, for the IAB events, it's like heavy ad tech, myself included in that in previous years. And then over time, we've seen folks, branch out from just advertising and marketing tech into health and finance and banking, et cetera. And what we see as investors are really smart entrepreneurs picking off categories that were dormant and sleepy that don't have a lot of excitement around them, but then making them exciting. Like, if you think about it, like mattresses were boring. Like, nobody likes selling mattresses, nor do we probably like buying mattresses. But like, enter Casper way back when, and their agency Red Antler. Again, we don't own Casper and we are not investors in Red Antler, but Red Antler made that category interesting. interesting enough that it got a lot of attention, and then a whole bunch of fast followers came into that category. We've seen it in payments. Like, payments is not interesting. Like, we had credit cards. The difference, the coolest thing in credit cards was, like, way back when, I think one of the companies allowed you to personalize your credit card. So if you wanted, like, the Boston Celtics credit card, you can get that. If you wanted your kids' faces on another credit card, you can get that too. But now, look at all the apps. Look at Zelle, look at Venmo, look at PayPal, look at all of those. Like, those were sleepy, dormant categories with huge TAMs, addressable markets that were just tremendous, that interesting innovation came in, saw very little competition, went and built, and all of a sudden, they unlock them. And so, if you're entrepreneurs, like, find sleepy categories, no pun intended to the mattress category, but find those categories, go build really interesting UI, UX, go solve for value props, and then go wake up and disrupt, those categories. That's
really interesting. And I think they've done, like, the PayPal and Venmo have done a really good job. The functionality is fantastic. I also think they've done a really good job branding themselves, right? Like, are you, like, I feel like when I talk to my friends, if we're out at a restaurant, are you a Venmo guy or are you a PayPal guy, And it's like,
have you played the game when you're, like, doing that? I was doing this last night with a friend when I was out at dinner, and whoever had the lower Uber score had to pay for dinner. Have you done that before?
No, dude, and I'm not going to be hanging out with you anytime soon. I'm not a private executive. I'm not a PE guy.
Yeah. But you're a nice guy. You probably have a higher Uber score.
Very cool.
It's a fun game.
Yeah, this is absolutely a fun game. The other thing I wanted to talk to you about, there's been a lot of talk this morning. There was talk yesterday about the emergence of all these new technologies, and I bet there's a lot of people in this room who saw some really cool stuff this morning, and they're thinking to themselves, I really want to get into that. I could see an opportunity for my brand or my retail store to take advantage of that tech. But how the heck do I know where to get started and how much money I need to apply to that and how to measure wins or losses? What kind of advice are you giving to companies who come to you with questions like that?
It's a good question. I super inspired sitting through and listening to all the conversations about NFTs and the metaverse and all the augmented reality areas. But to be honest, a lot of my companies don't even get search engine optimization correct. Like, there's so much low-hanging fruit around SEO, or their marketing attribution models are still last click, or so on and so forth. And so, at what point do you, like, get the house in order before you start diving in? And so, the general rule of thumb on how we think about that is there's always an innovation budget. Like, we always have some percentage of our spend that's going to go to trying new things where we believe our customers are or where we're hearing that our customers are so that we can test things. But then there's our core engine. And so most of our budgets are in our core engine to drive that respective business.
Right.
And, that can be anything from an advertising perspective, could be anything from TV to online video to so on and so forth, where we're just pushing the marketing machine, essentially. And so, 80% there, 20% testing budgets, and then optimizing in and over time, finding great things that work, optimizing into those, getting those into the core engine, finding stuff that doesn't work, shuffling those back out. But that means that you got to be able to measure. And if you can't measure, then you can't get off the ground. And so making sure that you have a robust measurement infrastructure in place that allows you to know what's working versus what's not working enables all of that. And to be honest, as you all become executives or are executives, if you can't measure, you don't have a job because you got to support what you're doing. And so you got to be able to walk into the board and say, hey, we did this, it delivered that, and here's the return on ad spend, or here's what it did for the business. And if you can't do that, if you can't enable somebody to do that, it's kind of dead on arrival.
So what are some of the signals that you recommend your clients look at to give them direction in terms to make those investments?
Well, so for us, it's our portfolio companies. And so, every one of them is different in the sense, some are selling furniture and some are selling high-end jackets, some are selling low-end jackets, et cetera, et cetera. But what they're looking for is, where is their customer? Where's their prospects? Where's their customers? A lot of times we believe we know where they are, but a lot of times it doesn't end up being that way.
Right.
And so, let's do a lot of research, let's study, let's walk the floors, let's go to conventions, let's see where people are, and be there and activate. And, do the tried and true for a lot of those, the playbooks that exist for whatever those activations happen to be, but then test new things into that.
Absolutely. I think yesterday I was talking about the fact that disruption is fun, gets our neurons firing, and I firmly believe that we are at an incredibly interesting time right now and an exciting time right now.
Absolutely. You think about like disruption, if you think about all the biggest tech companies that we know today, all born in like the crisis of the 1980s.
Yes.
And even some of the more modern tech companies today were started during, the global financial crisis. And so, the idea of being disruptive, you're disruptive when, the opportunity to be disruptive when your back's against the wall is 100% upside because you have nothing to lose. And so we're going into a time period in the economies where kind of got nothing to lose. Let's go for it. Let's be disruptive and see how we benefit from that.
That is really interesting. One of Meredith and I, who helped me work on the research, one of the themes that we were thinking about saying is that people are not staying in their own lane anymore. Businesses are not staying in their own lane anymore. And so we thought about that. Well, let's go back. Well, is that true? And then we thought about it. We were like, yeah, like now Apple is a headphone company. Right?
Yeah.
Google, whoever thought that like I'd also be going to Google Docs.
What's the reason for that?
Why is the headphone company? Well, because they had the music business, right? And then it's like the best way to listen to music.
So the way that we think about this is how do we bend the algorithm?
Bending the algorithm. Tell me about that.
If the algorithm thinks that we are a computer company, and we launch headphones, the algorithm is going to completely reset, and it's going to bend in a different direction. And in a world where most of our media consumption is controlled by algorithms, you got to do that. And so if you think about some of the most breakthrough ads, marketing, product, they're very different than what the brand actually is. And it's because they're playing on an outlier, sort of bending the algorithm kind of way.
Bending the algorithm with no time left.
Look at that.
It's awesome, man.
Hey.
Thank you for coming on stage. It was great stuff. I hope you come back next year.
Thank you.